My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to save you a little money. My job is not just to explain, to educate, but put days like today into context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Most of the time, traders have the memory of a mayfly. Many of them couldn't even tell you what they bought or sold 2 days ago. But one thing they do remember is a trip to Jackson Hole. Oh, they hated it. Took them 3 months to get over the experience, and incredibly, they didn't even go. I'm talking about Fed Chief Jay Powell's trip to Jackson Hole last year when he lowered the boom on the whole market. He told us the economy was way too hot. We needed higher interest rates for longer if we were ever going to beat inflation. From that late August vacation through October 13th, the entire stock market got laid to waste as so few people had seen Powell's sucker punch coming. So this year, on the eve of Powell's Jackson Hole speech, we still don't have inflation under control. The traders expect them to come out swinging yet again. That's why they sold everything today, especially tech. They don't want to be put through the meat grinder once again, which is what they are now expecting. It's why they got such a break when the market opened up because of NVIDIA. That's why everything got crushed today. Dow tumbling 374 points, S&P plunging 1.35%, NASDAQ plummeting a brutal 1.87%.
A house of pain.
The traders are willing to sell at any price to avoid repeating last year's Jackson Hole experience.
Sell.
Can you blame him? Jay Powell's a man of reason, but he's got to be in shock that his tough on inflation strategy hasn't done much harm to the actual economy. Normally, when the Fed tightens like crazy, you get mass layoffs, stores closing left and right. A year ago, so many money managers figured that by this point in the rate hike cycle, Powell could declare victory in the war on inflation and finally stop tightening. We were very optimistic before that last trip to Jackson Hole. 1 year later, traders are throwing out stocks, even the great stocks like NVIDIA, which had a remarkable quarter last night. They're getting on their knees and they're praying that they won't get fooled again. But if you want to be an investor, not just a trader, I think you need to take a longer-term view. It's true the economy was running too hot a year ago, but so was inflation. Now, though, we're actually in a different situation. The economy's running hot, but inflation isn't. In fact, inflation is slowing. Some people say slowing dramatically, and doing so without wrecking the entire economy. Of course, it's not uniform. Home prices are still up 40% from 2019, although now it looks like they finally may be headed lower. Mortgage rates are so high we might even get a buyer strike while houses and apartments keep getting built, something that could actually lead to much lower prices than we've seen in a long time. Cars are pretty much in the same place, but now they're in abundance. Remember, they had supply chain problems? No more. And they need to be discounted to move them off the lot. The auto companies are bulking up production because they expect some tough union bargaining. So tough that President Biden, the most pro-union president in living memory, might need to crack down and actually side with management just to keep the industry running. If Biden steps in soon after the September 14th bargaining deadline, then the auto companies will have way too many vehicles in the lots because they're pumping them out like crazy now ahead of the possible strike. And then prices will have to come down even more than they already have. And again, Powell will win that battle. But you know what? Lower housing and car prices were supposed to happen last year, not this year. It took way too long. And I think Powell can't leave anything more to guesswork at this point. He's got to be sure he's going to win. Maybe he'll be appeased that wages aren't going higher anymore, at least at the starting level. You can't job hop your way to wealth in this environment. But is that enough for Powell to declare victory against inflation? Not so fast. Weren't wages supposed to be going down by now? Weren't there supposed to be a wave of bankruptcies, not just one, Bed Bath & Beyond, but dozens of them? Shouldn't we have whole department stores turn into pickleball courts? That's how it's supposed to play out when the Fed takes interest rates from 0 to over 5% in less than a year and a half. But it hasn't happened. That's what everyone's so scared about. Instead, we're still struggling with mild to moderate inflation rather than skyrocketing inflation. The rich can complain that their margaritas made with Clase Azul now cost $90 instead of just $70. The regular coffee drinker is still trying to figure out how that latte got to be $7. And how come they have to fly to Iceland first to get to Europe because regular nonstop plane tickets now cost as much as first class did 2 years ago? So Powell has to go once more into the breach, dear traders, once more, and many have decided that history's got to repeat itself. So they dumped NVIDIA et al. And that's how this market reversed from splendid highs this morning. It wasn't about some piece of hair on the amazing quarter we got from NVIDIA last night, although a lot of people tried to find some today because they saw it going down. They made up a lot of stories. Nor were it the sharp words from Snowflake's Frank Slootman, who chided the analysts for not being able to understand that his business just got better in July. He chided him anyway. I think he thinks they're a bunch of dopes. Probably not. That was mean. You can't blame Powell for wanting lower inflation. That's the job. You can blame the Mayflies for taking profits in the mega caps out of fear, though. I mean, geez, there sure was a lot of it. They might not even know, though, what they're selling because they're really just dumping the S&P 500 futures. And it might not occur to them that the S&P is heavily weighted toward the mega caps. These traders don't have time to learn the stories, though I know this because I'm a bit of an anthropologist of the hedge fund species. I know they go out many nights a week and see and do things. I wish I had their lives. And they eat a lot of expensive dinners where they don't even look at the bill because that'd be poor form. Did they read what Slootman really said on Snowflake's earnings call? Oh, my God, it was too late. They had gone out and had such a good time. They couldn't. Hey, did they listen to Jensen Huang and Colette Kress on NVIDIA's triumphant call? No, they had somebody else who was like 17 look at it for them. Did they hear? But they bothered even to check out what Mary Dillon said when she launched the nuclear warhead on the heads of Foot Locker shareholders? Nah, they just looked at the calendar and laid off the risk to the portfolios by selling futures as a hedge. Me, I'm stuck with the Charitable Trust, but I have to know the stocks. The trust that has one mantra that was really important today, which is own NVIDIA, don't trade it. That goes right along with Apple, own Apple, don't trade it. We're exposed to long-held positions for the trust, and as we told members of the CNBC Investing Club, we own pieces of good companies. We don't trade them. We don't own the futures. We don't sell the futures. When these stocks go down, we get to pick more, buy more of these pieces of companies, and we do it at a discount. And we think Powell's speech from on high just might be the chance to get into some of our favorite stocks and get a little more exposure to the broader economy, meaning the stocks might get hit tomorrow, but the businesses will do just fine, regardless of what the Fed actually does. Even if Powell says he needs to take rates to 6% to beat inflation, the secular growth stories that we own will be unharmed. I say bring on 6% if that's what it takes. You see, what Powell has failed to do is break the inflationary mindset. He hasn't yet crushed the idea that you need to buy stuff now because the price is inevitably headed higher. Here's the bottom line. I think Powell's goal is to create an environment where if you wait, things will ultimately get cheaper. And because we aren't there yet, he's not done slamming the brakes on the economy. Then next year, he can declare victory in the war against inflation, which would be a huge win for the stock market. But you have to anticipate that. You have to take some pain now to get the gain later. Sadly, how the big money is lost and then made costs a lot of pain initially. Oh, but it is nirvana when we get there.
House of pleasure.
Harish in South Carolina. Harish!
Booyah, Jim. Listening
Booyah.
you since last 15 years. You have given best advice, made good money, and also I'm a club member.
Oh,
so
thank
I've
you.
got a very good question about what is your thought process for long-term as well as short-term on MongoDB?
All right, MongoDB is absolutely the classic software enterprise company. It does all the great things you want out of, it does automating, monitoring, deployment. When I hear things like that, you know what I say? Go buy the stock of ServiceNow. Let's go to Michael in California, please. Michael!
Booyah, Jim. Thank you so much for having me on your show.
Of course, Michael. What's up?
I was wondering what you think of the Broadcom stock after its merger with VMware. Is it a buy or is it a sell?
Broadcom, today, we did it. We pulled the trigger for the Charitable Trust, and members of the CNBC Investing Club know the reasons, and I suggest you subscribe, and you get all of them. One great piece of thought pattern that we put out today. Let's go to Sohail in New Jersey. Sohail.
Good evening, Mr. Cramer. Thank you. Thank you for everything you do. It's
Excellent.
amazing. A lot of insights on the market.
Thank you.
End of summer almost. Is there hope for AMC?
Well, AMC is a cold stock. That means it's what we call it. What do we call these? We call them controlled stocks. They're controlled by people that are way out of our hands. And I got to tell you, I mean, if you asked me if it wasn't a controlled stock, I didn't want to own it. But there are people who can take it up at a moment's whim because we have a lot of people who are in the market who don't play it by the same rules as I do. They have their own rules, and I appreciate that, and I wish them the best of luck. The market is preparing for Powell's speech tomorrow, and I want you to be prepared for whatever he may throw at you. His words could be just what we need to get some of our favorite stocks in at lower prices. on Mad Money Tonight. We're wrapping up our series of beaten down names by revealing the final 5 stocks that have lived in the doghouse during the month of August. And I think they could all be worth looking at here. Then Wall Street is worried about the state of the consumer. So is there still money to be made in the retailers? I'm revealing one corner of the retail cohort that I'm still a big fan of. And yes, you called me and you stumped me on Vista and Coursera, and I'm seeing if Cramerica had the right ideas and people had a horror sense when they came up with these. It's when I do my homework. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.